Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. All right, let's start talking about the markets. We did have some big economic news this week that seemed to move the markets, and then it was like, not so fast. The first thing was the CPI report that came out on Wednesday. The headline number was pretty much in line, but the X number, which is usually done to lower the inflation report, but the X food and energy number actually came in 1/10 higher. Seemed to spook the market a little bit on Wednesday morning. I'll talk more about that in a minute. But then we had a big recovery. Some are calling it the Nvidia rally. Again, I'll refer to that more in a moment. But then on Thursday, we had the PPI report, which is wholesale prices. Same thing. Headline number right in line with expectations, but the core number, the X food and energy number, 1/10 higher than expected. So kind of in line, but slightly higher than expected on the inflationary side of things. Seemed to be a problem on Wednesday morning. Thursday, it was just a yawn as they continued the rally back to the upside. So let's take a look at the charts and we'll see what's going on. All kinds of chatter. Basically, we're pretty locked into that 25 basis point rate cut in September. I don't know if the market's still thinking there could be 50 basis points, but with those inflationary numbers, I already felt like the Fed didn't want to go 50 basis points because that would kind of admit they're behind the curve, which a lot of people think they are. But that would be admitting it. So I think we're going to get 25 basis points, but yet the market seems to like it. I have a little bit of theory here, and we'll talk about that in a moment. But there's the move off of the lows from Wednesday. And right around 11 o'clock, when that CPI report came out, futures went down, the market went down. We went right down towards that previous low and then turned and moved back to the upside and pretty much rallied in a 45-degree angle the rest of the day on Wednesday. Then we had follow through on Thursday, even after the PPI report was the same. And then we followed through again today. Moving up into the close on Friday. Now, believe it or not, we're just a tiny bit overbought as far as the separation from where we closed and the high of the day and the 10-day moving average. Now what we're looking at is, can we take out that wave 5 high from back in July? If we do, the question will be, does the wave 5 move over? Are we still in a wave 5, or does that 5 relabel and somehow, which is kind of hard to believe based on what the bond market has been screaming for so long, move into a wave 3 and continue to move higher? We do have a qualified upward zigzag here, which we need to pay attention to. Always pay attention to the zigzags, as you know. So wave B correction there, right around 45%, which would send us up above that 580 level, right up to the 590 mark there. If that zigzag was to play out. But let's go ahead and take it off, because first things first is we've got to get above this area right here around the 580 level, right here, or excuse me, 565 level, right where that previous wave 5 was. If we can break that, then I think we are looking at potentially moving up to 590. A little bit hard to believe with what's going on in the bond market, as I mentioned. So let's take a look at that. Let's look at the TNX. Remember, this is interest rates on the 10-year. And when we take a look there, you'll be able to see that rates are breaking still to the downside out of this symmetrical triangle that we had. That doesn't really make too much sense with the fact that the market is moving to the upside, rates moving lower at this point in time. Remember, I talked about this symmetrical triangle, and I didn't really see a positive scenario on the breakout. If we break to the downside, kind of telling us that the economy is weakening. The jobs reports have had multiple downward revisions on the number of jobless claims being filed, revised higher, meaning more people are out of work than the initial number. So it's clear the economy is starting to weaken a little bit. We had Ally Financial come out and say they have a concern about the consumers, that people are being late on their car payments, et cetera. But then we had Bank of America that said they're not seeing that. So we have all kinds of mixed information from the financial world. But the bond market is showing rates continuing to go down, which means the Fed will have to be a little bit more aggressive on rate cuts. At least that's what it means to me. Had we broken to the upside, it just meant that inflation was a little bit hotter. So I guess the 1/10 higher on the core CPI and core PPI wasn't enough to really give us much of a bid here in the TNX. As we move to TLT, get a little bit longer on the curve here with the 20-year. And remember, this is prices where TNX is yields, prices and yields move in inverse proportion. So there's still a bid in the bond market, especially on the 20-year here. So prices holding steady above that 100 level. That's key. As long as the TLT stays above 100, I think it's likely to continue higher. So that means prices going higher, yields going lower. It's pretty crazy stuff that's occurring right now, I think, in the markets. Let's look at the VIX and see what volatility has done. We've been talking about the VIX as far as whether or not we were going to break that back below that 17.5 level, and we did. And you can see we're now back into that range between 12.5 and 17.5. We had broken above it. Kind of looked like maybe the 17.5 old resistance was going to become new support, but nope, back below 17.5 yesterday and today. So now we're back in that trading range between 12.5 and 17.5 on the VIX. And since we're in the upper end of that range, if we are going to stay in that range, you could make an argument that the VIX could drift lower, which would kind of give energy for a continued rally in the markets, which does seem a little difficult to believe at this point in time. And we look at the dollar, to me, in the whole financial side of things, the dollar is the most constructive because it's going sideways. It's channeling. That's what we want. We don't want to lose the dollar. We don't want to collapse in the dollar. We can't afford to have countries view the dollar as not the last bastion of support. We need faith in the dollar from other countries around the globe, but we don't necessarily want the dollar to get too strong because then it hurts exchange rates with companies with international exposure, which most companies do now. It's a global economy, as they say. So I do feel encouraged by the fact that we've been consolidating this wave 3 to the downside on the dollar and going sideways. That seems to be the most constructive thing going on. Some of the rest of it doesn't make sense. Now let's get to the DIA. Now, the DIA is something that we've been talking about a lot at TradeFinder on Tuesdays. And by the way, if you haven't registered for TradeFinder, you can do it using the link that you'll see on your screen. We do it every Tuesday at 1 p.m. Eastern time. It's during market hours. So we look at the market live, look at live Elliott Wave charts. We look for case study considerations, and we have a live Q&A at the end. We have a great community. Love to have you join along with us. So sign up for TradeFinder and join us on Tuesday. But getting back to the DIA, that is one of the case studies that we currently have open for TradeFinder. As I said, we look for case study considerations for the DIA to move higher. We've got it going to 424. And so you can see we are nearing that wave 3 high from the very end of August, early September. Tiny bit overbought on the DIA as well, but seem to be well on our way of hitting that target at 424. So that's the kind of cool stuff that we look at during TradeFinder. Now let's look at the Qs. And there's a zigzag there. I've already labeled it for you in an effort to save time. We can look for a continued move higher here if we take out this wave A high. That B wave correction is pretty strong, right near that 61.8% fib level. If you've watched me at all, you know that I believe that's the strongest of all fib levels. So if we can hold here and continue to move up, we do have a chance for that C wave extension. There definitely has been a bid in the higher beta names. We do have the 10-day moving average right at the 30-day. You'd want to see that continue. But it is encouraging that the Qs are back above the 10, 30, and 50. Are the risk assets coming back? The big tech, the Mag 7, et cetera, all that stuff. Are we coming back to that? You could make a case for it with rates going down, other than the fact that is the economy changing. We'll talk about how Nvidia has had an effect on this a little bit later on when we show the Nvidia chart. But for right now on the Qs, all eyes are on this A wave high. It's got to take that out. If it can, then I do think we continue higher on the Qs. But a tiny bit overbought, but not significantly so. So room to continue to move higher on the Qs. If we look at the IWM, the small caps came roaring back to life today. They broke below. We talked about this Tuesday as well. during TradeFinder. If we broke below 210, we would need to get back above 210 right away. Well, we rallied back up yesterday, didn't quite get above 210, but we did today. So back above 210 on the IWM, and now we see how far we can go. Does this mean that there is a risk appetite? A lot of people think the small caps are a good indication of risk on, risk off in the markets. I happen to be one of those people that feels that way. Little bit surprised to see the action that's going on based on the economic news. So I was mentioning that I think that there could be another scenario. I wanted to go back at the S&P chart, and right when we had this reversal on Wednesday was at 11 a.m. Eastern time, and that was right when the CEO of Nvidia came out and said, "Yeah, things look great," and just basically was all glowing about business, etc. The demand is still high, and they're struggling to meet the demand. So he was very bullish on everything, and the market rallied right at that same moment. Was it coincidence, or did that turn the market? But boy, we were selling hard, and it looked like it was going to be a bloodbath on Wednesday until he made those comments at 11 a.m. And then we turned and rallied back to the upside. But the rally was a bit odd to me. In other words, it moved in a 45-degree angle to the upside. I switch back over here to an hourly chart. I think you'll be able to see what I'm talking about. So there was the lows there, right in this area, that happened around 11 a.m. on the 11th. And then we just kind of rallied, and we've continued to rally this way. Could it be the Fed put? In other words, the Fed has been known to come in and buy the S&P. Is that what's going on? Does the Fed know that they're going to disappoint the market with only 25 basis points in the rate cut? They're seeing what's going on in the economy. They saw how the market reacted to even a tiny bit hotter than expected CPI. Is that what's putting a bit underneath the market? It seems plausible. It's happened before. Some of you may think it's a little conspiracy theory-ish. Maybe it is, but it just has been really odd the way the market has just stayed steady in this 45-degree angle. And then yesterday, there was a point in time, mid-afternoon, where all of a sudden there was a big flush move to the downside, and all of a sudden the market rallied back right away. I think I can be able to show you that on the hourly chart. Yesterday we had, boom, there was that move down, just kind of sideways, boom, moved down, and then immediately bought and continued into the 45-degree angle. Was that the Fed stopping an S&P buy program to see how the market would handle it, and saw that it was just like nobody else is buying the market but them? Who knows? Again, all speculation here, just fodder for talk, but interesting nonetheless the way the market has rallied. And coincidence or not, coming right after the CEO of Nvidia came out on Wednesday saying everything looked great. All right, let's move into the crypto world. Bitcoin trying to move back to the upside. We did a crypto show on Hub Financial Live, and the talk was about Grayscale. You've all seen the advertisements with Bitcoin and Grayscale, and the commentary from the crypto expert was that Grayscale has really high fees. They're refusing to lower them, so people are leaving Grayscale and going to other Bitcoin ETFs, which means just the same way that equity ETFs work. If you have a lot of redemptions, then Grayscale has to sell Bitcoin in order to meet the redemptions until that can get soaked up other ways, and other places, other ETFs. And that's been putting some pressure on Bitcoin. We seem to be maybe soaking that up. We closed back above the, and I know it trades 24/7, but at least at the print for the close, back above the 50-day moving average. If we look at Ethereum, which is the one we've been concerned about because it's a pretty well qualified 5-wave to the downside pattern, but 22.5 is holding so far. But to feel better about Ethereum, you got to get back above 2,500. If that can happen, then maybe we can disqualify this downward 5-wave impulse pattern. But for now, we still have to be leery of that until we can see Ethereum back above that level. Now let's talk about where the action has been in gold and silver. Look at this move the past 2 days in GLD. We talked about this last week, how we've had this odd pattern here. It's not odd. The GLD does consolidate and break out a lot, but to have a symmetrical triangle, breakout, symmetrical triangle, breakout, ascending triangle, and now a breakout, just boom, 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 3 in a row. is pretty wild. Now we have the point where GLD might be a little bit overbought, but this makes sense, at least of all the things that aren't making sense in the market. This does. You're moving into a rate cutting cycle. It should put a bid under gold and silver. And boy, it has in GLD the past 2 days. So I think we have more to go to the upside in GLD, but maybe we need to rest a little bit first because we are separated from that 10-day moving average. You know the drill. No security in any time frame gets too far away from the 10-day moving average. Now, if we look at silver, SLV had a comment last week in the U.S. market update where we were talking about silver lagging, and the comment was made that, yeah, silver can catch up rather quickly, though. Very spot on comment as silver is doing its best. It's still not quite back up to the levels where GLD is, but it's trying really hard. We had this symmetrical triangle here, quite a vertical breakout from this triangle. Once again, SLV just a little bit overbought. So maybe the metals need to rest a bit at the beginning of the week, and then we'll see what happens from there. But we're right against this little bit of resistance area here, just above 28, almost 28 and a half, but not quite. So a little backing and filling here in SLV would be great. And if we can break above this little bit of resistance here, then we're probably pretty clear to go up to finish this zigzag pattern all the way up to about 30 and a half on the SLV. So we'll see if it can continue this movement as it is breaking above that resistance area and breaking out of that triangle. Let's look at oil, which has moved to the downside here, clearly out of this. Now, somebody asked a question in the U.S. market update last week on how to know how far you're going to break out of a triangle. So I thought I would just share that with you. The way you look for that is you look, where's the low and where are the highs in the mouth of the triangle. This is a traditional symmetrical triangle. Sometimes you have expanding triangles where it's the opposite, where the point's on the left and the mouth is on the right. But basically, you measure where's the high, where's the low in the mouth of the triangle, which is drawn by those two trend lines, the lower highs and higher lows. And whatever that price movement is, that's the expected movement once you break out from the point of the triangle. So that's a general rule of how far to expect a triangle to break. And then we know that once a triangle breaks out, it's oftentimes tested. One of the three ways a triangle can break out is you break out, test the breakout, and then have the big move. Other times you break out of the triangle and it just runs with no test. But this one tested immediately. We went all the way down to the 67 and a half level, a little bit lower than I thought we were going to go. I thought we might hold here around 70, 71, but we went a little bit lower. And now we're bouncing back up, got back above the 10-day moving average on the high of the day, but didn't close above the 10-day moving average. So we'll be watching oil at the beginning of next week as well to see where things may go from there. Let's take a quick look at natural gas. Throwing a couple extra in here from what we have shown on the chart on the beginning, because there's lots to talk about. And here we are right back in natural gas, back to 15. Something to watch here. And this Elliott Wave algorithm, and the software is from the Hub organization, HUBB.com. You've heard me talk about it before. If you haven't gone there, go get a copy of this. You get free Elliott Wave. They also have a subscription service for AI signals, which have been phenomenally accurate. You can read more about it there, but you can get free Elliott Wave and free live Elliott Wave just by going to hub.com and registering for the software. But it's no more accurate than showing this chart where we moved down in UNG, and yet the algorithm did not label that for purple, which means that it's telling you that that wave 4 is done. It left it green, which means that's still active. So even as we were moving down, looked like we were about to break out below this wave 3, which would have certainly clarified a wave 5 to the downside. It continued to say, nope, we're not sure this wave 4 is done. And look what's happened. We've rallied back up. And now we're back up right to where that wave 4 is. And if we can break above 15 with a little follow through, look at this move. We came kind of straight down, no real retracements or corrections on the way down. If UNG could move above 15 with follow through, we could have a big move up to at least 20 in UNG. Now, it's got to do it first, but the potential is there. And that wave 4 could move up to more of an extension. It's only a 30% corrective move. It could correct a bunch higher, more from here. He tried to say, just talking fast because so much that I want to cover here. and cover off everything for you. Appreciate your time. I know time's valuable for everybody. Now let's get to some stocks of interest. We're going to start with Tesla. And you guys always ask about this. And while we're at Tesla here, quick reminder that every single month this year, we are giving away one of our level 3 subscriptions at ewotrader.com. It covers our time strategy, which is the sideways strategy, looking for stocks that are in a trading range following a big drop. They spike in IV, and we put on an income type strategy to capture that. The AI tells us the likelihood that it's going to stay in a 1 standard deviation trading range. So great income strategy, butterflies, counters, things like that. Then we also have the volatility strategy, which are these triangles. You saw one in USO, which we had in the volatility strategy at ewotrader.com. And here's another one right here in Tesla that we've talked about, and it includes the AI-infused impulse strategy, which is a directional-based strategy. So coming back to Tesla here, there's one of those triangles. By the way, to register for the free giveaway, all you have to do is leave a comment underneath this video. So just post a comment. You're in the registration, giving away one of those worth thousands of dollars every single month of this year. And if you know somebody that you think might enjoy these recordings, these videos, please get them to come to the site and subscribe. You know how the drill works. It's helpful. So here we have a potential breakout here of Tesla, continuing to move to the upside. So we had this breakout, just very similar to what USO did. It broke out, came back and tested the breakout, and now we're moving higher. You can't ignore this potential breakout. And the fact that we had another triangle back here with the point at 250, we can kind of kill 2 birds with 1 stone here on Tesla if we continue this upward move. So we continue the breakout of this current triangle, and then we go back to the point of the previous triangle at 250. So it does seem like there is a case to be made for Tesla to see 250. Some of you suggested, let's look at some different international markets. What a great suggestion. So the IDX is Indonesia. I can see why you wanted to look at it. Very strong wave 3 movement to the upside. I like to look at the DMI when you see this. And the DMI looks really solid. The ADX is not to 40 yet. So even though we've had a pretty significant move here and we're starting to get separation between the 10 and the 50-day moving average, it doesn't look like the IDX is done yet. Perhaps when the ADX moves above 40, that would be more of an indication. And then THD for Thailand, even more of a vertical move here. Now, this one's almost too vertical for me, with this big gap up. Now, we're doing a good job of consolidating the move. We've headed back to the upside today. Once again, the DMI, very constructive and not showing that we're overbought yet. It's just the fact that when we get these vertical moves like this, especially with a gap up in a vertical move, makes me a little bit nervous. So I think you do have to be wary that it's too far, too fast. But the DMI is saying, yeah, there's strength to the move. So you want to see some good consolidation. Perhaps there's still more to go to the upside on THD, but something to look at there as well. Here's Nvidia. I thought we've got to show Nvidia since people were saying that the CEOs would turn the market. I had mentioned before that if we could see 100 on Nvidia, I thought that would be a great opportunity to buy. We didn't quite make it to 100, but boy, we got awfully close. And so far, that was a good opportunity to come in and go long. And we didn't take out this wave 4, still have a pretty strong wave 4 and a good pattern here to the upside and a 5-wave Elliott Wave impulse pattern higher here. Now we have to break this trend line here where we've set a series of lower highs. So we got to get above this area here, I think, before you can feel real comfortable about going long. The easy trade bouncing off 100 has occurred, but we are back above all the 3 major moving averages, 10, 30, and 50. A little bit of a doji there today, so we'll see how that plays out on Monday. But keep an eye on this. I do think you want to be patient here on Nvidia. If you didn't get the bounce from 100, let's let it break this trend line. And then after that, we've got another trend of resistance here right at the previous wave 3 high. So there's a little bit of congestion in the way for Nvidia to continue higher, but not that it can't do it. Adobe, I thought we look at that because they came out and gave disappointing guidance. And so big down day today on Adobe. But we didn't take out this wave 4 yet. and we are oversold now based on the 10-day moving average. So what you'd want to watch is this 500 level. If there's any follow through to the downside on Adobe, can it come down and take out 500? As long as it doesn't, this could actually be a buying opportunity. But it was the guidance, not the earnings report, that caused Adobe to have its downward move today. Notice that the wave 5 did move into the tap box. So spot on with the Elliott Wave algorithm here so far. Now we just have to wait and see. It could be that we move into a trading range here between 500 and 575. That kind of makes sense to me with Adobe moving forward. So some sort of a butterfly, iron condor, something like that would work out really well, I think, on Adobe at this point. Didn't show Meta on the list, but thought we would come out because a lot of you have been asking about Meta a lot here. Since it's in one of those triangles and trying to break to the upside, I thought I'd throw that in as a bonus. We got to break above this level here of the previous wave 3, which was the same as the highs from back in July. If Meta can break above that, it could be off and running again. And if we continue this upside breakout, we very well could break above that resistance there, just about 540 or so. But a little early to tell, but we are above all the major moving averages. So let's see if this move here continues. You can see the lower end, the rules that I gave you on the triangle at 450 up here. It's a big mount of the triangle. So if it does fulfill that upward breakout, we will easily clear this wave 3 high and start looking for the new wave 5 high. Thanks so much again for viewing. Hope you have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.